Dear Lord, thank you for everybody that's gathered here today. We know it's Ash Wednesday. We hope that everybody that's here, we have a lot of people that are going to be watching with us now and later whenever we do the recording. We hope that you bring everybody that needs this information to us. We hope that you bring the right people into our sphere to that we can help, the ones that need the help, the ones that we are meant to help with all of this information. And we hope that our speakers grant them the ability to speak with clarity, give them the knowledge, and help them guide in the best way to help others, help this organization continue to grow and do glory for you, Lord. In Jesus' name we pray. Amen.
Amen.
Okay. So for anybody new to the Anti-Tilly Foundation Gather and Grow, welcome, welcome. The Anti-Tilly Foundation is a certified nonprofit 301c company. And what we do is we bring a lot of education and growth. And our main focus is on helping families grow together. We have a focus on the families, keeping them together, helping them grow, and helping them learn things. And tonight falls under one of our focuses that we like to go on under financial literacy. And one of the reasons that we bring in financial literacy is because one, we want to educate people about money, the things that they don't know. We want to get them rid of the fear of money or idolizing money on those things because we really just want to grab clarity on that. And what we have learned throughout the years is that a lot of our families don't discuss money at the dinner table, don't discuss things from generation to generation, and we really don't learn how to build on that. And as we've reached out and met a lot of the wealthy families out there, we've come to understand that that's opposite in their households. They talk to their grandparents, they talk to their parents, they talk to their kids, their grandkids. Everybody is learning about different things in financial literacy. And one of the things with insurance is it's a great way to protect us, and protect our wealth, protect our assets as we're building them, protect them after we've built up, and make sure that we just have a nice bubble and comfort, just kind of encircling us and making sure that we are protected and we could pass along things to our next generation. So that is what we're going to be getting on today. For those of you that don't know, these events are once a month on the third Wednesday of every month. They are always free. We have speakers ranging on all sorts of topics. And make sure that you're signing up on our Facebook, on our Instagram, sign up on the Meetup account, and you'll always get notified of the monthly meetings. But put it in your calendars. It's the third Wednesday of every month at 6:30. We're going to go ahead and jump into it with our guest speaker for tonight, Feliciano Giron. He is a veteran of the United States Army, where he served 10 and a half years with multiple deployments in Eastern Europe and the Middle East in support of Operation Joint Endeavor and Operation Silver Lions. He's been happily married to my cousin Johanna Giron for 32 years, and he has four children and two grandchildren. I really wanted to highlight those things because talking to somebody that knows this industry inside and out, but also is a family man themselves, is a grandparent themselves, has been married happily for 32 years. Those are the type of people that we want with that kind of knowledge and experience to come into our group. Um, Prior to starting his own insurance company, um, he retired from 26 years in the healthcare industry as an executive operating acute care facilities, being the CEO and chief operating officer in both for-profit and nonprofit arenas in New Mexico, Texas, Arizona, and California. So now Feliciano is the owner of the Giron Insurance Company. It's an insurance brokerage agency that helps to create client engagement via multiple insurance companies to meet coverage needs across the home, life, auto, business, professional bond, and healthcare markets. And that's very important. You heard the umbrella of everything that he has understanding and has expertise in. A lot of times, if you're talking to the wrong insurance agent, you will not be able to get all of these different inputs on all the things that go into protecting your family, your assets, your businesses, your health. All of these things are encompassed under one umbrella. And if you talk to him, when you hear from him now, you will get a great understanding of why it's so important to have a knowledge in all of these spaces. I'm gonna go ahead and turn it over to Feliciano. He has asked that we're going to get through the presentation. He's going to go through a bunch of different things. You guys be dropping your questions in the chat as you think about them. There's a lot of stuff to make you brainstorm and come up with questions. And then at the end, we'll leave like 30 minutes at least to go ahead and answer those questions. But we really want to get your brain flowing on all the different subjects before we jump into the questions at the end. So with that, welcome Feliciano Hiron.
Thank you guys so much. I'm very excited to be here with the Anti-Tilly Foundation. So many exciting things that you guys have been able to accomplish. I really appreciate, Michael Ross, Vanessa, Auntie Francis for all of her efforts in the things that you guys are accomplishing. All the board members and the outreach in the community has just been phenomenal. And it's nice to see an organization growing from the roots up and really taking hold in the community. And one of the words I learned a long time ago, I was taught this by several nuns in St. Louis, and they came to me and said, very, very stoic Irish nuns, they said, remember, if you're going to grow an organization, you need to start by friend raising. And it's nice to see you guys out there fundraising and bringing people into the community. And it's exciting to see people come together around these topics and the opportunity for us to share and learn. Because again, in the world, it's the small stuff that gets us going and helps us to pass information and knowledge on to others. And again, that's going to be critical. I'm going to go through a slide deck, talk about multiple subjects. It's going to be a lot of information. We're going to try to move fast on some areas that are going to be dull, but I want to give everybody just a general picture of things and then get into some of the key subjects that are going to be important for you in your own individual lives. And before we start, I always like to start off, put a smile on everybody's face. And, everybody makes fun of themselves and their industry. And so I'll start off with a joke. There's a gentleman, he's out and he's really angry and he starts drinking and he walks into a insurance convention and he starts shouting and he says, everybody in here is an insurance agent is a crook. And this guy jumps up and he runs over and he goes, hey, you hold your tongue. And he's like, why? Are you an insurance agent? He's like, no, I'm a crook. And that's very hurtful. And so again, that's that kind of sets the stage for how the world sees insurance sometimes, and more importantly, how we engage in the things that we work with others and try to really build that knowledge with others. So again, thank you very much for having us here and helping with our presentation. Our organization is really excited about the outreach that we've been able to provide across multiple states. And so a big challenge is understanding what are some of the impacts in those states. And as you can see, New Mexico, Arizona, Nevada, these are the states that we work in. These are the states that we drive our business model through. You could see the population, licensed drivers. These are people that you share the road with, that I share the road with. Total number of homes that are out there in each state. As you can see, some states are a little bit bigger, and the question I always get asked is, why are there more drivers in Arizona and why are there more homes? Well, that's because Arizona is predominantly a retirement community, and the average mean age for the state of Arizona is 62. So a lot of retirees, a lot of drivers, a lot of people driving cars in the state of Arizona. So kind of paints that picture for you and gives you a sense of what we're looking at for our communities. Real quick, we'll jump right into insurance industry overview. This will kind of give you guys a sense of what is happening in the insurance industry. A lot of things are changing for the insurance industry right now. They've seen a lot of stability and growth over the last several years. 2025 was, again, a very strong financial year for the insurance industry. Again, some people hear these numbers and they're used to hearing billions, millions. Well, the insurance industry talks in trillions. So direct premiums that were written in 2025 were 3.5 trillion, and that's versus 3.3 trillion in 2024. So that's a lot of money exchanged for a lot of coverage. People really, when you sit down and you say these next few things, they kind of get a little bit of a shock when you say your insurance is as much a part of your mortgage, your groceries, and your utilities. That's one of those monthly expenses that you bear in order to have the privilege to drive your car, have your home covered, all those components, make sure your life is covered. And again, that's the reason for these large numbers. Again, it was a profitable time for insurance companies. Publicly traded companies did pretty well, slightly underperformed the S&P 500. For those of you who follow the stock market, you know that the S&P is really one of those guide wires by which a lot of industries measure themselves against. Again, the health sector was the only one that really saw a loss, even though they had a gain. So the health sector had an $8.9 billion gain in 2025, but cumulatively against 2024, they lost $16.1 billion because in 2024, they had a $25 billion profit. So somewhere in between 2024 and 2025, there were more people getting their healthcare and their medical benefits and utilizing them. So again, the healthcare sector saw a big shift in the numbers that they were putting out there. The overall insurance sector, again, minus the health insurance side, is looking very strong for 2026. A lot of companies are projecting growth, and that growth is being aimed at about 10%. At the end of 2025, the United States accounted for 45% of the world's direct premiums. Again, as a country, 45% of the private insurance that was purchased out there was purchased within the parameters of the United States. And the next is the European Union, which is all of the European countries that make up the European Union. So it kind of paints a picture of how big the insurance industry is from all facets. People ask all the time, why are premiums increasing? What are the whys? Again, increased medical cost, economic inflation across the U.S. As we all know, prices are going up everywhere. There's a lot of industry-based expenses that are going up. Hospitals, physicians, manufacturing, tariffs. We hear that word all the time in the news. Labor costs, people need raises, cost of living is going up, and your supply chain. Auto parts coming from overseas, increased costs because you're applying tariffs now, increased auto repairs because prices of parts are going up, your labor is going up. Home values, again, home values are improving in some markets, they're dropping in others, but again, it costs more to build a home and to replace a home or to remodel a home or repair it. Wood costs more, screws, nails, door frames, you name it, the costs are up. And then we are now in a technology revolution, as we all know. So we have smart cars, smart homes, electric vehicles, medical technology. People love to turn on their air conditioners and their heaters while they're away at the mall. And at the same time, people love to have all that technology at their fingertips. And so again, we're going to see increasing claims by covered clients. So people are going to start utilizing that insurance that they're paying for. The key factors of cost, again, insurance premiums are cost-based, and a lot of people don't realize that it's where you live. That's where your insurance really gets factored. If you're looking at your home, it's the year it's built, your claims history, your roof, your yard, your car, it's your model of car, your mileage, the year the car was made, your claims history. And I highlight this because, again, it's location, location, location. Right now, Nevada is the highest and most expensive state for auto insurance in the United States. So it far surpassed California, far surpassed New York, and far surpassed Florida. So again, it's where you live that matters. For life insurance, it's your payout size, the age of you as an insured person, the health of the insured person, the model of the plan, and if you are renewable, and there's renewability. If somebody's going to sell you a policy and let you renew that policy. Like all purchases today, remember that whether it's connected to your credit score, your financial aspect of your life, it's going to be you, the customer, and your appetite, what you're willing to pay, that's going to really drive some of these factors on and the coverage you're going to have. So again, people ask me all the time, well, how does insurance work? And so back in the, as I like to say, or my kids would always say to me, in the olden days, we used to call it the law of large numbers. This is what you learned in accounting class. This is what you learned in business courses. Now they call it the rule of large numbers, and it's applied to many industries. The hotel industry uses it, insurance industry uses it, casinos use it. And what it really means is that the more people that you can bring into a pool and collectively take a risk, the better off you're going to be able to handle unexpected expenses and claims. So you can cover more people, because in that large pool of people, you're going to have people that are going to be driving safer. You're going to have people that are going to be taking care of their homes, taking care of their health, taking care of those critical aspects of their life. And that helps you build that pool. For casinos, the rule of large numbers is simple. If you come in and you gamble, they always say that the house always wins. Well, of course, the house wants to always win. So if every person who is out gambling is really losing 49% of the time, then what you're doing is you're giving the odds of compounded earnings back to the house. More people gambling, and especially those people who have really bad luck, that's what keeps all the casinos running. Again, it's that predictability. It's a larger group allows you to be able to predict more and be able to understand what people are really at risk for, what risks you can have, and then more importantly, understanding that if you had a smaller risk pool, companies would go bankrupt. They'd fall apart, because you can't really insure 10 people. You need to insure 100,000 people to make numbers work. So we're going to shift over to the health insurance. A lot of people are talking about health insurance coverage, how that's impacting them, especially with some of the changes that have happened with the Affordable Care Act, with Obamacare. Some of these things are really impacting families now, and it's critical because, again, health insurance coverage, here's a rule of thumb that we carried from my old career in healthcare, and that is you spend the most amount of dollars from 0 to 5 and the last 3 years of your life on your healthcare. Again, when you're born, everybody's getting shots. They're trying to make you healthy. You have your 3-month, 6-month, 12-month, all these appointments, all your shots, all these things. And at the end of life, you're going through all of the care processes that are going to help you as you approach that end of life process. So again, that kind of gives you a sense of why health insurance is so important. On December 31st, the ACA, the Obamacare subsidies, they expired. And that helped a lot of people stay covered under the Affordable Care Act. When those expired subsidies went away, what you had was you suddenly are now facing a market where you have families of 4 that are looking at a $22,600 a year plan for their private health insurance. That impacts entrepreneurs, it impacts small business owners, it impacts everyone that is in the private market for insurance. Again, this also means that there's going to be increased copays, deductibles, and out-of-pocket expenses. Because again, the insurance company wants you to share some of that burden as well. Because they want some skin in the game from you, the end users, so that they know you're going to be using your policies correctly. And ultimately, you determine what correctly is, because it's your health and it's your policies. People have left the healthcare pools because they can't afford to be in some of these pools. Remember the rules of large numbers. So as that pool gets smaller, you start to have compounded issues. So premiums start to go up because insurance companies want to stay at a certain level because they know they need that much money to cover X amount of lives or provide X amount of care. The health insurance sector, again, as I explained to you guys, saw that $16.1 billion change. And again, that was huge. For 2026, the United States is expected to see an increase in uninsured because less and less people are going to be covered. And so for the first time since we jumped into COVID, we are now going to see a large pool of people that are going to be out there that will not have health insurance. Here's a little bit of interesting information, premium bump. So if you guys look at the scale at the bottom, this takes us from 1960 to 2022. This will show you the personal healthcare spending of individuals inside of the United States. So you can see how healthcare has had that steady uphill climb in regard to dollars out of pocket in order to receive care. Again, companies that are out there are offering commercial plans, but in order to overcome the losses that they're going to have by less people participating in ACA, less people in enrolled lives and covering that large pool, that rule of large numbers, there's going to be increased copays. There's going to be increased out-of-pocket expenses that people are going to see. Hospitals are going to increase some of their expenses because, again, you have physicians. Physicians are now more than likely going to be employed because that's a trend that has been going on for the last 10 years. And again, that's labor costs, administrative pieces so that they could submit their bills, equipment prices, all of these things. Because again, technology is becoming expensive, so those costs increase healthcare. Again, the trend is leaning towards a lot of benefits of care for 2026. People have been holding off, but we're going to start to see those people who are insured are going to take advantage of being able to get in and see doctors and get their health care, because people have been holding off the last several years, but we're going to see that shift happen. Again, people are going to be accessing the healthcare system, so you're going to be seeing those costs going up. And like anything else, those costs are then going to be passed on to people who have commercial insurance and Medicare covered patients, because those are the two populations that can offset some of the expenses for the uninsured or those people that are less insured, that are trying to get their health care and get in to be seen for care. Employment policies and coverage. This is always an interesting conversation that I've had with people. And again, it becomes the big discussion. I share this joke with everyone. I say, there's a manager and two employees. They went to lunch. They're walking down the street. They find an oil lamp on the sidewalk, and one of the employees picks it up. He starts to rub it, and a genie pops out. Poof! Genie looks and he says, "Oh goodness, there's three of you guys. I usually give 3 wishes to one person, but since there's 3 of you, each of you is going to get 1 wish." So the first employee says, "I don't want to have to work anymore. I want to go to the Bahamas. I want to drive a boat. I want to just have a drink and have fun the rest of my life." And the genie says, "Okay, it's granted." Poof! He looks to the next person and says, "Hey, I want to go down to Mexico and I want to just sit on a beach and drink margaritas and enjoy myself and just have a grand time the rest of my life." And the genie says, "Okay." Poof! Then they turn and the manager's standing there holding the lamp, and he looks at the genie and says, "I need those guys back before lunch is over because we have jobs to do." And so again, this ties back to that employment coverage component. There's a benefit, being employed. You get the benefits of that employment, but it comes with the cost of working. I know that there is some differential beliefs in what people want to see in their workday: work from home, work out of the office, all these changes in that dynamic. But again, if you want employment benefits, there comes the cost of being with the people who are going to rub the lamp and bring you back from your hiatus, your vacation. So again, employers are seeing increases in commercial plans. So they're going to pass those costs on to you as an employee. Yes, you're going to be covered, but you're going to have increased shared cost models. So what that means is prescription medication, huge cost for employers. So they want to share that cost with you. More and more people are using popular medications like GLP-1s. They're doing all these other things that are medications that are marketed to them. They want those. Those are higher costs. Medical devices, technology is higher. Again, it's a big increased push to access plans and control costs. And so a lot of insurance companies and employers are now coming back and they're coming up with plans that they call control cost efforts. And so these are limited access plans. They're not going to call them HMOs. They're not going to call them PPOs. What they're going to say is, hey, if you go see these certain doctors, you'll have less copays, less deductibles, less money out of pocket. And again, that helps them keep their costs in line so they can continue to provide these benefits. Again, you're going to see those increased costs. We talked about it. Doctors, hospitals, prices are going to go up. So again, um, people ask, is it better to have private insurance or to be tied to an employment policy? Ultimately, it's up to you. You have to weigh what your choices are going to be. Entrepreneurially, you have the ability to come and go, grow your business. As an employee, you obviously have to show up for work. And so those are choices that people have to make in regard to how they're going to see their coverage and their policies and benefits for their family and themselves. Prescription shifts. This is kind of interesting. So we talked about in the previous slide increased shared cost models. Those increased shared cost models are really tiered models. And so what's happening is a lot of employers are saying, hey, listen, we're going to offer you all these generic medications and they're going to be at zero or lower copays and out of pocket for you. But if you want to use the name brand, it's going to be an option, but you're going to pay more for it. And of course, if you're paying more for it and there's a generic equivalent, you're going to weigh the options, especially for those medications that you're going to need that are going to help you in your daily maintenance. There's a big shift now. A lot of employers are now asking employees to go through pharmacy, mail-in pharmacy prescriptions, because again, the cost for them is far less than you using a urgent prescription, i.e., a Smith's, a Walmart, a Costco, all those places to get your prescriptions, and especially around maintenance medications. They really want you to keep your blood pressure medicines, your thyroid medicines, all the easy, cheesy peasy, everyday stuff. They want you to get it in 90-day increments and mailed to your house. Here's an interesting thing. Everybody's cutting costs, but the pharmaceutical companies still want to make their money. So there's a $9.1 billion spend that was put out in 2024 so they could market directly to you, the consumer, so that you could have those name brand medications top of mind and then create that demand. So again, it's a way out, pocket costs versus, the medications that you want, the medications you've seen in the commercial, things of that nature. So life insurance. So life insurance is kind of it's one of those subjects that I know culturally, in particular in the Hispanic culture, a lot of people, we shun away from it. Culturally, we don't like to talk about death, but then we have Dia de los Muertos. So go figure. That's the way it is. And so, it goes back to something I'd like to share with people. There's an older gentleman. There's a faith healing session happening down the street from his house, and he happens to pick up the phone, call his daughter, and say, "Hey, can you come take me to this faith healing session?" Daughter picks him up, puts him in his wheelchair, loads him up, takes him down the street. They get there. The minister notices him in the back of the tent and calls him forward, and the daughter pushes him up to the front, and he tells him, "Stand up, sir, and walk towards me." Everybody stands up and says, "Oh my goodness, he can walk." And the old man shouts back, he's like, "That's great, but I still can't see." And so again, it may not be something we want to talk about, and it may not be something that we want to see, but life insurance is a critical part of how we protect our family and our loved ones around us. And so there's many types of life insurance coverage that's out there. Again, I'm going to hit some of these top ones that give you a picture, a sense of what's out there. Term life insurance. Term is just that. It's a term. It's for a limited time. It's for a specific amount of coverage. If you happen to pass away in that time frame, then the benefit goes to your family, to the people that you bequest those dollars go to. Permanent life is another death benefit, but again, permanent life is slightly different in that it provides you with a cash value. So as you're earning, you're accumulating dollars towards that ultimate benefit, but it also builds tax dollars on the side that are tax deferred. So later on in life, if you get to a stage or a point where you say, "Hey, I'd like to take some of that cash out and use it," it allows you the opportunity to take that cash out and You can, again, you're banking that for something at another time. Of course, it decreases your overall payout, your benefit, but you now have cash in hand to do the things you like to do in retirement. Whole life, again, this is something that has very predictable premiums. You have a solid rate of cash growth. A lot of insurance companies will invest this money so that they can, again, it's whole life. It makes you whole upon your death. Your death benefit is fixed, so it's guaranteed. And so those are things that are available to you. So if your loved one passes away and they had a whole life policy and the whole life policy was worth X, but they also earned premiums above that, they made money. That money then goes also to the beneficiaries as well. That portion will be taxable. Um, Universal life insurance, or what they call IULs. This is a great benefit, and I highlighted in yellow, if you are younger and you start younger, because this is an investment product. It's a life insurance policy that allows you to invest and grow. A lot of people hear this, the Gerber plans that are out there, those are IULs. People use them for grandchildren, for younger family members. Again, same thing with variable life. If you are, again, younger, it's better to start these. The only time that these things are beneficial for someone who is midlife or older is if that person comes into cash and they're able to pay up and do catch up, and then they're able to make themselves whole with an IUL or a variable life plan. But again, there's a lot of options, and you as a consumer, you're going to have to weigh what that means for you, but know that there are options out there for you. Again, life insurance is such a key component of what we deal with, especially as we get older, especially as we start to see the world shift around us. We have grandchildren, we have children. You want to leave a legacy for those that you love. This is how you build that legacy. This is how you build that additional dollars. Work and home coverage, work, as we like to refer to it, or employer coverage. It's going to be your best, most inexpensive approach. So if you're working, again, remember the genie. You're going to rub the genie. You have to be back before lunch is over. You're going to be able to get a term plan through your employer at a very reduced rate because they're paying a large portion for you to have that. It's a benefit. If you leave your employer, your employer says, hey, we're cutting this section of the company off, or you say, I'm going to go and I just finished my degree and I'm going to get a job doing this. You can take that policy with you, but you have to announce it at the time that you're leaving with your insurance company. It's definitely going to increase in price because the employer is not going to be covering that component anymore. So that's going to come out of pocket, but you need to weigh your options, especially if you're going to be between job searches and between jobs. Do you say, hey, I need to have coverage for the next 4 months till I get my new job? This is something you want to sit down and weigh out. If you leave your employer and you don't take your coverage with you, your policy terminates at the time that your employment terminates. So again, that's work. That's that employer coverage that you get from being an employee. Home coverage, again, you're buying this on your own. You're going out, you're seeking a licensed agent, you're having a conversation with them about what it is that you're wanting to see, what it is that your hopes and expectations are, what are the overall expenses that you may leave your family, what are the things that you'd like to see happen. Do you want your children to continue their education? Do you want the house paid off? All of those components are going to be conversations that you'll have with your licensed agent, because that's going to help determine that list of plans we talked about, what's going to be the best option for you. Ultimately, these plans are as active as long as you're paying for them. And as long as there's dollars to cover those expenses, those plans stay active with you. These types of coverage plans, are really going to have multiple factors for you to qualify. If you have a spouse and you both want to be covered, You have to meet certain factors for qualifying. The biggest determining factor for you to think about as you're going through this process is making sure that your age, your health, you really have to be prepared to have some of those conversations around these two big topics. Qualifying factors for coverage. So home coverage. This is you're going out, you're buying your own policies. Age. Again, the younger you are, especially with investment models, age, if you're younger, you're healthier, you're going to see better costs. You're going to be able to buy the plan that you're looking for at a reduced rate, and it gives you the option to have renewability. So at the end of that time frame, if you go with a term plan, because of your age, and if you're younger, healthier, you're going to get that renewability. There's going to be increases in your costs, but again, not if you went and tried to purchase that same plan at the age you were currently at, and you missed out on that 5-10 years before of having the plan. Health, disease process and history. There is a database called MIB, and it's not the old movie Men in Black. No, this is the Medical Information Bureau. And this keeps track of all the data, every single piece of your life, your medical appointments, prescriptions, surgeries, anything that an insurance company has had to pay out, any doctor visit, all of this is kept in the MIB, especially prescriptions, especially any health issues you may have had, because these are factors that insurance companies are going to tap into the MIB and look at as they qualify you for some of those plans for life insurance coverage. Lifestyle. I talk to a lot of people, and I tell them, look, if you're scuba diving, parachuting, drag racing, you're wrestling rhinoceroses, insurance companies are going to look at that. They're going to say, wait a second, hold on, you're living a very risky life, and that's going to be factored in there. Your job, your career. If you're an explosives expert, the insurance companies are going to look at that as well. It's just a fact of life. They want to help you with your risks, but they don't want to take on every single risk themselves as well. And then your digital footprint. Remember, the internet's forever. I cannot say this enough to people. The internet's forever. People will say, "Oh no, I don't live a risky life. I don't do anything." Well, insurance companies are now using your digital footprint to help determine if you're going to get coverage. And so if they click onto your Facebook page and you're skydiving in Vegas, they're probably not going to look well upon that because you said that you didn't do anything risky. So again, digital footprint is now a factor in how they look and qualify you. Work coverage is simple. If you're an active employee and it's an employer benefit, if you want it, you sign up for it. It comes out of your paycheck, your portion, it's yours. People who have life-threatening diseases, if they get hired and you have cancer, you're going to cancer treatment, a company hires you, you can talk to the company. Many companies will exclude this. They'll say, don't worry, because their pool, remember, the rule of large numbers is big enough that they feel comfortable insuring and giving you a life insurance policy. Again, it's something that you have to talk with your employer. Key employment positions. If you hold a senior position inside of a company, if you are a chief executive, if you're a COO, you're the chief financial officer, if you're in one of those capacities in an organization, they offer you additional benefits that you're able to buy that will help you with more coverage. This is really critical when considering that people who are in those roles usually have a lot more financial expenditure. They have a lot more things that they may be dealing with. They still have student loans, things that they have to factor in. So buying that additional coverage because your position allows it is also a good thing to look at. So again, keep that in mind. I've talked to many people who didn't really understand this, and so they've said, no, I don't need more coverage. I already got a policy. And I tell them, yeah, but for $29 more, your employer is going to give you $250K of additional insurance. Jump on it, because it's those missed opportunities that you'll regret later. And again, if you leave your employer, you can also take those benefits with you if you're willing to pay those additional prices till you transition to a new place where you're going to work. Best point of entry, really simple. The door opens. Again, you come in, the door is there for you. It's how you build that door. And start early. Your age matters, especially if you are self-purchasing policies, those home policies. Age matters, health matters. A lot of people will get back into shape. They'll lose weight because they want a policy, so they'll lose weight. The younger you are, the better the price point. Again, if you're younger, you're healthier. Again, that price point, they have to start you somewhere. The healthier you are, again, it's connected to your age. So companies, if you have a 23-year-old who's healthy and wants to buy a policy, it's easy to sell that policy. It's easy to get someone covered. If you are a midlife or older person and you come into a large sum of cash, again, remember we talked about how it opens coverage options. So some people will go in and they'll buy a whole life policy and they'll just pay it off because they have cash. They come into some money and they're investing in themselves and investing in the future of their family and their dependents. So again, those are multi-factors of coverage, and it's entirely up to you what you're looking for. But talk to your licensed agent about those options. Don't leave things out because you think I might not be able to afford it or I'm too old. I know people out there that are in their 60s that are running marathons, and they're in far better shape than some people I know in their 30s. So again, you might be surprised at what's available and what options are there for you. Auto insurance coverage. This is the bane of everyone's existence. This is the thing that causes everybody the most angst and pain as you write that bill or it gets electronically deposited out of your checking account. Because again, you're wondering, I'm a good driver. I don't get in accidents. I've never filed a claim. Why are these rates going up? What's causing that? And again, it's increased inflation, prices across service-based industries, manufacturing, labor costs, supply chain, tariffs. You may have a domestic car, but your parts come from overseas. And yes, Canada and Mexico are considered overseas. So if you drive a truck, a Ford pickup truck, your parts come from Canada. There's tariffs on those parts. If you drive any other kind of Ford, your parts come from Mexico. There's tariffs on those parts. So again, the costs of those parts, auto parts, increased cost, increased auto repair costs, labor parts, cost of technology. Everybody's got a smart car. We like our phones to connect to our speaker so they can play our music, all these things. All of that technology costs money when you need to fix it, repair it, or replace it. Your driving practices, safer. Again, if you're a safer driver, there's also those less safer drivers out there. Auto accidents. Again, the number one issue for teenagers in auto accidents is they're either texting or doing something on their phone when they get in an auto accident. It's the time you spend with a company as a client as well. If you spend 10 years with a company, you're probably going to get better rates just because of the sheer nature. Now, if you spend 10 years with a company and you've got 3 claims and they're ready to not allow you back on their plans, well, you've kind of set yourself up because you've had risky behavior with your driving. Again, the age of your vehicle, the model of your vehicle, how many of those cars are on the road? Because again, if there are more of one type of car on the road, there's more ability to repair those cars at a cheaper price because there's more parts available. So again, that's a big piece. And again, claims history. I talk to a lot of people. You ask them all the time. They come in asking for policies. They say, oh, yeah, I don't have any claims. And you say, okay, well, that's great. And then you find out that they have multiple claims and you go, well, you didn't tell me about these 3 claims. And they go, yeah, I didn't think it would matter. Well, it matters because that's how your coverage gets calculated. Because we'll jump back real quick. This is what's causing this slide talks about what's causing the increases. And this talks about how the coverage is calculated specifically for you. So your age, your sex, drivers on the policy, the number of drivers, your zip code. Remember we talked earlier, location. If you live in a rural area and there's less cars on the road and you're a safe driver, you're going to pay far less for insurance than people living in Albuquerque. It's just the nature of how insurance companies look at the driver. Your credit history. If you pay your bills, they consider you a safe driver. And so you're more likely to take care of your car. Your auto insurance history. How long have you been a client? How long have you been a client with someone else if you're going to change insurance companies? Claims history. Again, we talked about vehicle type, the model of your vehicle. Again, tariffs, auto parts, increased auto repair costs, especially for vehicles that are very limited vehicles. Mercedes, BMW, Lexus, the repair costs on those three types of vehicles have gone up by almost 20% in the last 3 years, just because of the type of vehicle, the models of vehicles, and the parts. The cost of technology, again, huge, huge, huge. And we talked about it earlier, the MIB database. Insurance companies also look at databases to help with this calculation. And if you look at the yellow, it's CLUE. It's a comprehensive loss underwriting exchange. There's an ISO A+. There's also the index database. There's the MVR motor vehicle reports that come out. All of this is looked at, and that's what helps to calculate your coverage. So it's really complicated, and at the same time, it's really simple. So if you're a safe driver, you have a car that can easily be repaired, replaced. Again, you've been with the company a long time. You're putting yourself in a better position for your calculated coverage costs to stay low or not increase as much as others around you. And again, here's a question I always ask people all the time. Do you have the right coverage for your market or situation? Many people say, I just want the basics. So if you're in New Mexico, the basics is this: 25,000 for bodily injury or death of one person, 50,000 for bodily injury or death of two or more persons, and 10,000 for property damage. But again, remember, this is the minimum. This is what your insurance company is going to cover. Anything above that, that's why you have all these. I love driving down the interstate in any large city, and you see all the attorneys that are up on the billboards. You know, God bless them. They need to make a living too, but they're there to help their clients get the most out of any type of litigation. Anything above what your minimum insurance will cover is going to come directly out of your pocket. So again, there's ways to look at this. Sit down with your agent. That licensed agent is going to talk to you about different types of additional coverage you can help yourself with, umbrella coverage, things that will help you if you're in a situation where you may be facing a lawsuit that will go above and beyond the coverage you have. I love this conversation here because I see this all the time. People go out, they buy a brand new vehicle, they sign up for 5 years, they pay it off in 3. The truck is 3 years old, it's got 60,000 miles. The minute they pay off their last payment, they're running into the office and saying, put me on the basics, on the minimum. And we sit down and say, well, hold on. Remember, it's still a newer vehicle. It's, you know, you're not going to have coverage. You've got to understand this is there, but we're not going to tell you what you should do. Just be aware of what could happen if you're not covered. I've had many clients drop their policies, and I get a phone call 3 months later. Hey, I was just in a car accident. I hit a lady's car, and what do I have to do? Okay, were you at fault? Well, yeah, I hit her car. Well, the good news is your minimum liability coverage is going to pay for her car. The bad news is you're going to pay for your car out of your pocket because, again, you didn't have the coverage. You went with the bare minimum. So, again, there's compromise, there's wins. You decide as you talk to your agent what that looks like for yourself. Are you getting all your discounts? Bundle policies, career discounts. There's a lot of discounts out there for veterans, military, multi-vehicles. I see that a lot of people will miss opportunities because they don't really sit down and talk to their agents about all of these components of what they're looking at. Some people may have a car insured over here and another car insured over here. But if they looked at bringing both cars onto a policy with a company, that would be beneficial for them and they'd help reduce some of their costs. Again, talk to your licensed agent, because there's just a lot of things that may be out there that you're missing that are key, because again, conversation is going to be key, for you to help move forward. Home insurance coverage. This is near and dear to my heart, especially for homes in New Mexico, Nevada, and Arizona. I always tell people it always starts with your roof. It's your roof in your yard. You know, a lot of people, they kind of, the roof is there. They know that the roof's on the top of the house, and it's not a problem until it starts leaking, or the insurance company says, hey, you're missing tiles and we're going to renew your policy. So again, the average cost of home insurance premiums went up by 3% in 2025, and as high as 7% in some markets. This 2025 was a record year for home claims. Again, natural disasters, fires, all of these things. Inflation, supply chain. You keep hearing me saying inflation, supply chain. Again, these are big pieces that factor into cost. Insurers are taking fewer risks. Companies are leaving states. There's some states that companies won't even go into anymore, because again, they don't want to take the risk with homes and property in those states. So a lot of insurers are stepping away from certain states, certain markets, just because that appetite isn't there for them. This is going to surprise some people. Reinsurance rates are up. Yes, your insurance company buys insurance policies on your policies. So they take their insurance policies and they buy reinsurance. So if there is a payout or a catastrophic payout, the insurance company gets to file a claim on the policies that it had to pay out in order to make you whole. So yes, insurance companies buy insurance on your insurance policies. Again, it's the old game of who's on first. And so you have reinsurance rates that are going up. Again, if you have a pool, a broken fence, overgrown yard, a yard full of items, that 57 Chevy that's sitting on the 4 old rims in your backyard, that may keep you from getting reinsured. Again, unless you're fixing it up and you have photos, that's easy enough. Again, your roof is too old. It's the number one reason why people are denied home coverage and policy renewals. I see it all the time. And we have to walk clients through a process. People are jumping through hoops to get new roofs put in, get roofs repaired, just a magnitude of things that happen. But again, it comes down to how old is your roof? How is it maintained? Is it new? And do you have the receipts? I also deal with a lot of clients who own their own roofing companies, and they're amazing. They put brand new roofs, put a brand new roof on their house. They come in and they go, mira, puse un techo nuevo. Aquí están los retratos. And I look at the pictures. I go, that's beautiful. That's a beautiful roof. Where are your receipts? Oh, I don't have receipts. Well, the insurance company wants receipts because the receipts are the documents that help them get the policy put into place, because now they know that you put an expenditure out of your pocket to make their investment into your coverage whole. So again, remember that if you're putting a new roof on, or if you're hiring a family member to put a roof on, receipts are going to be important. I don't know how many times I've seen people get tripped up by this. And here's going to surprise a lot of people. Insurance companies are now using satellite photos and drone footage to look at your roof, to look at your yard, to look at your neighbors' yards, to look at neighborhoods. So again, just know that technology, we talk about the cost of technology, it's also impacting coverage in your house. Backflow prevention. Backflow prevention, again, is really key. A lot of people will sit down and don't even know what backflow prevention is. So from the end of your property line up into your house, you own the issues. So if the city or county or the source septic backs up from those lines into your home, that's your issue that you're dealing with. And again, many municipal governments recommend retrofitting with backflow prevention devices, and it's great that if you have the opportunity, you have the cash flow to do it, but get to know your local codes, because there's a lot of things that have changed that have also changed on insurance policies. especially for home coverage. Backflow prevention is a big one. I see it all the time. If you retrofit your home, you also can get discounts from your insurance company. Again, annual plumbing inspections. I talk to people all the time who have septic systems. I tell them, just get an annual plumbing inspection. Bring someone out, because those leach lines get plugged, your septic tank may be cracked. Just have it inspected, because again, if you need to file a claim, you have the proof that you were taking care of your septic system. You were taking care of that plumbing issue. And then again, cost of technology and products. Backflow prevention, new technology, it costs. Smart homes, smart heaters, smart air conditioning, smart lighting. Preventive maintenance on those things is also key. Because again, if something happens, if there's an electric fire, you want to be able to show that you had an air conditioning company come in every 3 months and they were working on your air conditioner. So, you don't know why it caught fire, it just did. And so now you have the ability to defend yourself if you file a claim, because you're taking care of the things that are important inside of your policy. Um, Again, this one here is hypersensitive for many people. Pets, liability coverage, and valuables. A lot of insurance companies exclude certain breeds. I didn't make the rule. I know some people are probably out there going, oh, I didn't make the rule. They primarily focus on pit bulls, American boxers, and large bully breeds. Bully breeds are like similar American bulldogs, things of that nature that resonate from the pit bull and American boxer family. Make sure that your policy doesn't have these restrictions. We've had to deal with the individuals who had pit bulls who bit someone. There was an exclusion inside their policy. Um, Again, that completely eliminates any responsibility on the insurance company, because again, you bought the policy, you understood there were restrictive limits, and that goes away, and now you're responsible for that total cost. Liability coverage, big thing to have. People also call it personal liability coverage. It protects you against, bodily injury and property damage, slips, falls, breaks, broken arms, broken bones, dog bites, property damage to your neighbor's house when the tree falls over and knocks over their fence. Most insurance policies for your home have a standard coverage that starts at 100,000. Again, something for you to talk to your agent about. Get your licensed agent to talk to you about what that looks like. Walk around your yard. If you have big trees, if you have small trees, what are the things that are going to cost you some liability? Do you have things that may be broken that need to be fixed, like a walkway, a sidewalk? The other big piece is high value items. These things have a small bit of coverage in each of your home policies, $3,000 to $5,000, but they're not going to cover everything. So your diamond rings, your gold watches, your cameras, your instruments, your artwork, your fine china, your gun collection, your rifles, all of that. Um, it's an additional endorsement. It costs more, but again, those items are now covered under your policy. So again, those things often get overlooked, and again, it's something that's important to you. So talk to your licensed agent about this. Most home insurance policies and most home insurance owners, they forget to go back and update their policy. You may have bought your wife some artwork, a new ring. You bought your husband a new pistol. Those things are important to put on your policy, and make sure that you keep that updated. And just make sure you do an assessment of all the things, all your valuables that you have covered in the house. It's really important, because again, it's those small things that you overlook that cause the biggest emotional heartache or financial burden later on if there's a claim filed, if God forbid your house burns down and you lose things. One of the things that I like to tell people again is liability claims are one of the top 3 items filed against the home insurance policy. And so remember, if your neighbor falls and breaks his ankle in your yard, there may be a claim filed. So be aware, keep yourself aware, make yourself aware of those things. Do you have the right coverage for your home's value? Another big one that's happening here in the Vegas market, we're seeing some parts of town where home prices are continually skyrocketing. We see some parts of town where home prices are going the other way. many people buy a home insurance policy and they bought it 10 years ago, 15 years ago when they bought the house. And the insurance company is going to notify you and say, hey, the value of your home went up. And they're going to say, we think you should insure it for this. You have all rights to say, well, no, I'd like to just keep it where it was at and, keep it there. But again, it's entirely your responsibility to go out and find out the true value of your home and making sure that you have the right coverage for your home. Um, I have seen so many people go out and get shocked and surprised when they come in and they're like, I want to buy a new policy for my house. We run the values on the new house because we pull everything from the county assessor's office. And they're surprised to find out their home is worth 150K more than what they purchased it for. And so again, those are those value added conversations that you're going to have when you're talking with your licensed agent, because again, as values are increasing, you have to understand, in order to get your home rebuilt or replaced or repaired, those costs are going up as well. And it's the inverse. It works the other way as well. If your home value is dropping, you don't want to be overpaying for coverage, because it's a double-edged sword. The insurance company is only going to pay you for what the home is worth. You can't over-insure an item, if that makes sense. And it's much more simplified with what I'm saying. But talk to your agent about that type of coverage, especially if your home is seeing a price drop in its valuation. It's important to understand that as well, because that's a financial benefit back to you if you're going to pay less on premiums. Business insurance, one of the topics that I enjoy talking to people about. You talk to people about many things around business insurance, and you say to them, okay, you're starting a business. They come in, they're all excited, they're bright-eyed, bushy-tailed, they're anxious, they're ready to go, and they jump in there and they buy all the insurances, they buy everything they need up front because they're starting their company. And then over time, policies fall aside. They forget about them. They forgot to buy professional liability. They don't have E&O coverage anymore. All of these things happen as the business is going along, and then suddenly they get the top bid on a contract, and they come in, they're like, hey, I need to get liability coverage ASAP. If you've gone 9 years without professional liability coverage in your company and you're trying to buy a policy, we're going to help you find it, but the cost is going to be astronomical because we're going to have to go to a third party market to get it. And so keeping an eye on your policies that you need to keep your company going is just as critical as watching the day-to-day operations and watching those day-to-day pieces. Because again, if you want to leave a legacy for your loved ones, you need to make sure that that coverage component is there. Always have those annual reviews with your licensed agent about what you need coverage around, because you'll get emails, you'll get letters, some of it gets lost, thrown away. Some people just choose to not act on it. It's important to make sure you're moving on that coverage. Equipment, locations, buildings, high dollar items, especially fleet vehicles. I see a lot of companies, they will pay off, they'll buy 10 fleet vehicles, they pay them off, and they drop and they take less coverage on those vehicles. Those vehicles are what you're driving your business on. That's what's garnering your revenue. That's what's building your life. Be mindful, because the more that vehicle is out on the road, the more risk it's going to take. The other thing companies don't realize is that when they lease equipment long term, that leased equipment, for all intents and purposes, is yours. And if it gets stolen off of the construction site or it's missing from the warehouse, if you do not insure that piece of equipment, that's out of your pocket. Again, information technology. A lot of companies now use laptops in the field, iPhones, all these other devices. People get hacked. There is insurance that helps you with that. And again, it's important for those business owners to have that. Big issue here for real numbers. There's a as I talk to people about this, I always share things, and I always try to put things in perspective. And I always tell them about I always tell them about if the tree falls in the forest and no one hears it, Does it mean that my illegal logging business is doing well? No, no. What it means is that you're not applying the reality of your business into numbers and projections. Especially when you're starting a business, a lot of people want to shoot pie in the sky. They want to say, I'm going to make this much money my first year, and they do these pie in the sky projections, or they talk to Chat GPT, and Chat GPT tells them, well, in this industry, at this time, at this point, that your business should be making this much money. When you bring that cost in to talk to your licensed agent, we can only take that face value to cover your business. And then we find out a year later, you didn't make that. You probably made half of that. And so now you're like, oh my God, what do I do? And so then you're in a situation where we have to go back, reassess, exactly what you made. Now insurance companies, they want to start digging into your finances. They want to look at all this. So it's better to start from the beginning with realistic numbers as you're building your organization. Again, this is money that you haven't made yet. And this is so important because I see this happen so many times as you talk to clients. I've seen other agents have conversations with clients. I've sat in on conversations with clients, with other agents, to try to get them to understand that what you're projecting and what is going to be the reality of your business may be sitting on two different levels. So it's always best to lean on the real numbers. Don't focus on those projections because you haven't made that money yet. You may be talking about year 3 finances when in reality you're still in year 1 and you haven't even gotten off the ground. So keep that as a point of understanding as well. Liability, again, the checks, spills, frills, and falls, as we call it. Biggest expense to companies after your salaries is liability coverage. Workman's comp is such a critical component, and it's so heavily monitored. I see a lot of people try to go without it. The state knows. There's databases. The state knows. Civilian, non-employees getting injured in your place of work. Somebody walks in the door, they slip and fall, break an ankle. Your fleet vehicles are in an accident. Just like your private auto coverage, make sure your coverage is correct. And again, cash handling. You see this all the time. I see it, especially here in Vegas. A little bit of money disappears every day. Just a little bit, just a little bit, just a little bit. And then all of a sudden you find out that that person who worked for you for 12 years has taken $40,000 over that 12-year span. You need to make sure that your coverage is in place for any type of that diversion piece, because again, that little bit of money adds up at the time that it's discovered. So keep that in mind. Workspace environment, I can't say this enough to business owners. Walk around. Make sure your walkways are safe, your desks are safe, your doors are safe. Do it weekly, do it monthly, do walk rounds. Just walk around. Just take a look at your space. A little bit of investment in your time is going to save you a lot of money and save you heartache with any claims that might be coming down later. Technology. This is changing how insurance is covered. Technology changes how the world sees everything. We talked about databases. Everything's in a database. Everything. I had a conversation with a friend of mine who said, I will never give anybody any of my information. They'll never use my picture for anything. They'll never let them use me in a database for facial recognition. And I said, too late. You have a driver's license, right? And he says, well, yes. I said, when you signed for that driver's license, you gave the government permission to use your photo to build databases for facial recognition. No, I didn't. I said, yeah, you did. I said, but nobody reads that 6 to 8 page document that you sign for when you get your driver's license, because it's our driver's license. It's our ability to go and drive. There's a database for everything. Auto, remember we talked about Clue, we talked about ISO. All of these databases are what insurance companies look at in regard to your coverage. Home, it's called Q, Claims and Underwriting Exchange. There's A+, there's LexNexis, there's Verisec Analytics. For your health and life, remember the MIB, the Medical Information Bureau, it's there. Business, you have your index systems, and then you have your index database. These are things that look at you all the time. They know what you're doing with your company, where it's going, all those components. Drones and satellites, we talked about that. They're using these now, especially if you say, I'm going to repair my roof. Trust me, they're going to get a quick picture of your roof to make sure it was repaired. And then they're going to ask you for pictures because they want to validate that what you said is done, and that they're able to see that and have proof. Now, in the old days, they used to send a technician. He'd come out to your house, he'd pull out a ladder, climb on your roof, looked around, know that you had all this trash on your roof. There may be an old bicycle hoop up there or something. They don't need to do that anymore. They send out drones, they get satellite photos, especially with fleet vehicles. If you say I have 40 vehicles, they all work, they're going to go out and look and see if those 40 vehicles are there. They don't want to see 26 working vehicles, 4 that are being cannibalized for parts and the rest are just missing somewhere. They want to know that there's 40 vehicles that they are insuring. Again, AI, people always ask, well, how does AI play into this? AI, they take high resolution photos, they feed them into an AI software database, and the AI software database will tell them where some of the big risks and factors are around your home. That's how they know if your roof is damaged. That's how they know if that tree is about to fall onto your fence. That's if they know that you have 4 cars sitting on rims in the backyard. All of these pieces they're able to take care of. And then again, they're able to multitask because it takes less staff or technicians in the field. So you get one drone pilot and he could hit 6 houses faster than if you had 3 crews trying to do inspections in the same house. This is especially helpful after disasters. And again, I can't stipulate this enough. Remember, it all starts with your roof in your yard. Your roof in your yard. Your digital footprint. Everyone sees your digital footprint. Life insurance companies also want to see your digital footprint. Auto insurance companies want to see your digital footprint. It verifies your identity. We want to know that that driver's license is really you. Driver coverage and pricing decisions. Do you live a safe life? Are you out drag racing your car on the weekends? Insurance companies don't want to see that. It helps to assess claims and repairs. People take pictures of everything. People get a $9,000 check to fix the area that burned by their fireplace, and they spent $600 on paint, and they took a trip to Acapulco. And insurance companies will find out because, again, they're going to want receipts. They're going to want to see that this was done. Again, your digital footprint, people taking pictures of everything. I ate at Taco Bell today. All of that follows you. It helps to detect fraud and suspicious behavior, especially with people that are starting businesses. You want to go back and look and see, hey, how's that business doing that we're insuring? If you've got all the paperwork to start the business, but there is no actual business, again, this is something that insurance companies have an interest in. Auto and driver tracking. A lot of people will say, oh, I don't participate. I don't want to participate. And then they get into a conversation. They find out there's some cost savings. It's called UBI. And this is usage-based insurance. And it's technology that travels and tracks you with your driving habits. It also helps them determine what your new insurance rates are going to be. It's something that you participate in. But keep in mind that if you've got great driving habits, it also finds out if you have terrible driving habits. There's also a very popular electric car company, and a lot of people are buying these cars, and everybody buys them. This company offers amazing insurance. They do it at such just phenomenal rates. I have friends who buy their cars, and they're like, hey, I want to get a policy. I tell them, no. Get your policy from this company because the rates, you can't beat the rates. And they look at you kind of strange, and you say, no, trust me, just get the rates. But remember, drive safely, signal, brake, don't speed, don't be on your cell phone, because guess what? These very popular electric cars are also tracking all your behaviors and feeding them back to a database. And by month 3, we have many people coming in the door telling us, oh my God, my rates went up 300%. Well, yes, because they also figured out your bad driving habits. Your car let them know of your bad driving habits. And you took their insurance, and it was great if you could keep it low, but a lot of people don't do that. Again, get in a car accident, all the technology in your car helps investigators. So keep that in perspective as you're going through things, as you're looking at what's a safer car, what's a better car to buy, what are the things that I should have technologically in my vehicle. And if you look below, here are some of the programs that companies use that are UBI. And it helps you to get a better sense of what that means for you if you're going to participate. The great DMV conversation. This is always fun. Um, it's in the database. Everyone knows. By the time you finish buying your auto insurance coverage, within 16 hours, the bank that you're paying payments to on that car, the DMV, tracking databases for claims if you have to file a claim, the amount of money paid out on that claim, underwriting, and again, how you drive UBI software, it's all being fed. Um, it's all shared electronically the minute that purchase process gets initiated. The great news is all this data is protected under the Gramm-Leach-Bliley Act. And what that is basically HIPAA for auto coverage and insurance coverage. So we can't go and sell your information to a bank so that bank can come and try to sell you a second mortgage because we know that the value of your home is X and it's almost paid off. Your information is only there so that we can utilize it to assess and critique and value you as a client and make a determination how you're going to be covered and at what that price is going to be. Again, all of this reduces insurance fraud because there are many people who go out and they say, oh, hey, I've got auto coverage because I bought a 6-month policy and here's my card. And it expires in 6 months, but they stopped paying their insurance policy 2 months ago. When you get pulled over by law enforcement, many people wonder how they know you didn't have insurance. They go to their computer and they click a few keystrokes, and the Fairfax software, the Tyler Technology software, the ReverDocs or Global Nexus is telling them exactly how much coverage you do or don't have. So again, it prevents insurance fraud from happening. Cost savings in you. I appreciate you guys staying awake, and I know this is a lot of information, and you feel like you're drinking from the fire hose, but this is the part that I think is the most important for you and the most critical aspect of the conversation, because again, it helps you to understand what's out there and the things you can do to help yourself, especially with that output of dollars every month. What's the best way to get some cost savings, get those reductions in policies? So again, annual, semi-annual policy reviews. I tell many people, go and sit down. They're your policies. The more you know about them, the more you can talk about them, the better. Meet your licensed agent. I know so many people who don't even know who their agent is. They just buy insurance. They bought it online. They bought it on their phone. Go meet your agent. Sit down and have a conversation with them. Create a peace of mind about your coverage. Know your coverage. Understand what you're doing with that coverage. Identify coverage gaps. Are there things that you haven't thought about that you may need in your policy? Make sure all your cost savings are accounted for. If there's discounts that they offer, are you getting those discounts? And then are you stacking those discounts? Some companies allow you to stack discounts. So make sure you're tapping into all those discounts. And that happens when you're sitting across from your agent. You're having those conversations. Life changes that need to be documented. God forbid you lose a spouse. Your car that you drove for years finally broke and it's parked in the garage and you're paying premiums on it. But that car's never going to move from the garage because you bought another car. Let them know because they're going to help you get those exit strategies, and they're going to, again, they want to keep you as a client. So they're going to work with you. And then again, get copies of all your documents. You're there. You might as well get the copies of the documents. Take them home, put them in a filing, put them in a file Stick them in your sock drawer, put them in your underwear drawer, wherever you keep your important stuff. Put your documents away, but get fresh copies. Quote shopping. I talk to people about this all the time. I share this with people from many walks of life. It's your time. Your time can save you money. If you have a licensed agent that's a broker, they have access to multiple carriers. Have them start looking for you. Go in, have a conversation, and say, "Hey, look, I want to know, can I reduce my rates on my home? Can I reduce my rates on my auto?" Have those conversations. If you see a lot of marketing going on, call those companies, because those companies are trying to reach out. They are offering options for you to explore. Look for cost savings. And please, I cannot reiterate this enough. Lower costs does not mean same coverage. Lower costs does not mean same coverage. You may have a $500 deductible now, and then you go in and you get a cheaper cost plan, but it's because you now have a $1,000 deductible. And so, yes, your premiums went down, but now if there is an accident or you have to file a claim, it's $1,000 instead of 500. And so you need to make sure you're wearing, you're wading through all that. You're understanding what it means. Explore multiple policy coverage. Some companies want and allow for customization. Talk to those companies. If you're a member of those insurance companies, ask them what you can customize. What's going to give you the best benefit? If you've been with an agent, agents come and go. And you want to explore because you're looking for new customer service, but you like the company, you just don't like the new agent. There's nothing that keeps you there. You can stay with companies. It's just a matter of you picking up the phone and saying, "Hey, I really want to transfer my policy to this agent over here." But you stay with the company because that's the company you're comfortable with. You've been with them for 20 years. Again, this also lets you know if you're in the coverage sweet spot. I like to call it the coverage sweet spot because a lot of people have been with an insurance carrier for many years. They go out to explore and they're thinking that, "Oh my God, I'm paying so much for insurance." And they find out that they're actually paying really, really well for their insurance. They just don't realize it because they haven't explored this for some time. But now they know that they're in that coverage sweet spot. They have the best price available for them. This is phenomenal. I can't say this enough. The Senior Driving Discount Program. This is something that you should take advantage of. It's a huge, huge opportunity. Please take out your cell phone, start taking pictures of all these websites here. Those of you who are tech savvy, do a screenshot. Again, this is for mature drivers. It's a mature driver program, 55 and older. It's an online course that you take. You either take it on your own, it's self-paced, or you can go get help from AARP. Your certificate and your discount are good for 3 years. And depending on the insurance provider, the company that you're with, it could be 10 to 15% discount on your policy immediately as you present that certificate. Again, you can access all these online on websites that will help you. Please, please take advantage of this. There are so many people out there. When we mention this to them, they look at you like a two-headed dragon, and we're like, "Yeah, you can get a discount." And I've actually had some people say, "Well, why are you trying to give me a discount? What are you doing, Feliciano?" Well, I'm trying to keep you satisfied so you'll stay here as a client and allow us to continue to service you. So please take a look at the senior driving discounts, professional career discounts. A lot of insurance companies, it's your career. You've committed to it. Take advantage of it. If they're going to offer you a professional discount, take advantage of it. For certain careers, these discounts can range from 5 to 10% depending on the insurance company. And if you start stacking some of these discounts, you're going to see a real big difference for yourself. Again, some of the main career fields: doctors, nurses, military, firefighters, police officers, teachers, farmers, engineers, civil servants. The list goes on. Sit down with your agent, your licensed agent, have that conversation, find out. Again, that semi-annual, annual review, this is where you bring all this information and sit down and have those conversations with them. Bundling prices, Flow had everybody bundled. Now bundling is seen in different lenses, so you can look at things differently. So you have multiple policies that can help you stack up your savings. You can bundle your home, auto, life. You can get anywhere between 10 to 25% discounts depending on the insurance company. If you go with one company, the best part is it simplifies how you manage your policies. You've got one company, one agent, one place to go. As we used to jokingly say in the Army, it's one throat to choke. So if there's an issue, you only have one person to go to and have a conversation with. Some carriers have multiple insurance products that's multiple companies that they own. They will offer you options so that you can go out and buy policies from some of their different carriers, but they allow you to get a bundled price. And then other companies now are starting to unbundle because they'd rather have you buy insurance X from here, insurance Y from here. It's still under their umbrella, but they're going to give you discounts because they're trying to move some of their risk or some of their insurance business to some other companies that may not have had big enough rule of large numbers to help drive some of that business for those certain insurance companies that are out there under their umbrella. So keep that in mind as you talk to your licensed agent. And with that, I'm going to stop sharing the presentation, and we are going to go back to the screen here. And I know it was a lot of information. I put half of you to sleep. You can thank me later. You don't have to worry about any anesthesia expenses being put on your MIB report. That was all compliments of me and my long-windedness. And one of the things I want to kind of close with this joke. There's a young insurance agent. He's sitting at his desk, and his boss comes in, and he's really upset, and he goes, "Hey, how did you sell a life insurance policy to a 108-year-old man?" And he looks at the boss, and he's very happy. He says, "Exactly the way you taught me. I looked at all the databases and found out that there have been no 108-year-old men dying in the last 5 years." And so the boss walks away and just clenches his fists. Again, it's all in the database. It's how you approach things. It's how you have those conversations with the people that are out there, because it opens that opportunity for you to create that savings. Please take advantage of the senior driving program. All you mature drivers out there, I know I will. When I get there, I am going to take that test. I am going to be online taking that, because that's a huge savings, and it's there for us. And those of you in career paths, those that are educators, those that are in different fields, look into it, ask questions, and find out if it's stackable. Again, it's your insurance policies. Have those visits, have those conversations, get to know your agent, because sometimes it's a little interesting to find out when people don't know who their agents are. And so, again, you wouldn't buy, you wouldn't buy something from somebody you didn't know or care to get to know. So get to know them, because you're spending a lot of money with them.
Awesome.
Thank you, Feliciano.
Feliciano, if somebody wanted to use you, and most of us are in New Mexico, and they're worried about their premiums being affected by it, can you walk us through if we're able to switch over to somebody that's as knowledgeable as you? Sometimes we're working with a young kid that has never owned his own house or doesn't have a family or a business or anything, and we might want somebody with more experience. Can you walk us through what that looks like?
So as licensed agents, we are licensed in our primary state. So that's the state that you take your initial licensing exam from. It's sort of like for teachers, they get their New Mexico praxis, and then you take the national exam. And so then you're able to go on to other states and get licensed there. So for myself and all the agents in my agency, we're licensed in New Mexico, Arizona, and Nevada. We are not here just to sell you a policy. We're also here to talk to you. So sometimes you may not want to talk to your agent. You may just want to pick up the phone and call somebody and ask a question. we're happy to talk to you about that. We're also happy to talk to you about agents that we know in those states. If you're looking to change and go to a different agency, if you're looking to explore other plans that might be available for you, we can point you in the right direction. I'm happy to do it. If you want to do it by phone, text, if you just want to pick up the phone and call, there's just a lot of options and opportunity for people out there. And again, one of the big things that we strive for is that we're trying to build ourselves as a resource for the community. And that's especially critical, and not just because we're in Vegas. We serve clients everywhere. So again, that's the piece that's important for people to understand. So if you have questions, do not hesitate to reach out, because sometimes people are afraid to. You have a long-standing relationship with your agent, or you don't want to disrupt things with your agent because he's your friend, or that's a valued partner in your life, or somebody. Pick up the phone and call somebody else. They'll give you information. They'll help you get the information you're going to need to have that conversation with that friend of yours.
Feliciano, would you mind putting maybe your email and phone number in the chat?
Yeah, let me.
And then while he's doing that, does anybody else have any questions? I know we're a little over 8. Thank you all for your time. This was awesome. So much value.
And I'm going to put my personal email, because some people don't like to send stuff to the actual official corporate email. So yeah. I'm going to put my personal email, and please feel free to reach out. And my phone is a New Mexico phone. And so you guys can reach out to me there as well. You can text. And again, willing to have conversations. And again, if you have something as simple as, hey, tell me again about that senior discount, or how do I know if I qualify for these things? Just let us know. We're happy to be involved. We're happy to talk. We're happy to share things with you. We'll pass information to you. Again, you may have somebody that you already have a long-standing relationship with. You're just trying to figure out how's the best way to approach them. I hear that all the time. I have people walk in my office and say, hey, my sister-in-law is my agent, but I really don't know how to ask her this. And I'm happy to tell them, hey, this is how you approach it. And next time I see her at a meeting, she will not know that I gave you this information. And so, remember, she's your family, not mine, but she's my friend. So
anybody else? So the email
questions. Yeah, I know there was a lot of information that we put out there. If you guys also want some information from the presentation, please reach out. I'll be happy to share that with you guys. If you guys, again, just have a question that may have popped up, do not hesitate to reach out to us. I'm really excited because I had the opportunity to share this presentation with my son, Gunnar. He's right here. So Gunnar is in charge of our marketing and community outreach. He's phenomenal.
Hi, Gunnar.
If you want to talk to Gunnar as well, please. He can help you. If you see all of our ads and our marketing and all the things that are going on, he's the guy. He's the genius behind it. So he's happy to talk to you about that as well.
I have a question
Yes.
regarding the senior discount and all those. There's various links. So
Yes.
Are they all the same course?
It is the same course. It's the same
Okay.
course, and it's sponsored by the state of New Mexico. And if you have somebody who's in Arizona, or you want to connect them to Arizona, let me know, and I'll send you the links for Arizona and the links for Nevada if you guys are happening to come out here on vacation and you get bored at the casinos.
Oh, sure.
I just put that out there.
Thank you.
I just put that out there in case you guys are, if you come out to Vegas and you're bored and you want to spend some time by the pool.
Feliciano, I have a question.
Yes.
Are Are technology, computers, iPads, are those kinds of things considered valuables? Are smart TVs or no?
They're valuable after a certain amount. So
Oh, I see.
check with your carrier, because again, if you're like rule of thumb is if it's 500 or above, you're going to want to make sure it's that you have that on your insurance plan. And
Okay.
also, the other thing to remember, there's a lot of insurance companies who also sell coverage that will allow you to also have technology coverage on all the electronics in your home. And so look into those, because those will save you a ton of money. I know we have that for our home, and there's many a time that phones accidentally got dropped. Nobody knew how the iPad got water in it, all those things, and we've taken them. They've gotten repaired. We paid our $25 copay and our deductible, and we get a new screen. Or in the case of one of my children, they got a new phone. And
Also, security systems on our home
security systems as well.
that we
Make
pay
sure
monthly.
if you make sure that you mention to your insurance company and to your agent that you have a security system. And also, if you are paying monthly for it,
Yes.
make sure that it's either tied into a policy that came with the system, or that you're able to put that onto your home insurance policy as well. Because a
Okay.
lot of times that gets overlooked, because those become very pricey. A lot of people forget those cameras get expensive, and
Yes.
all the connectivity and the all the great
The Nix and
devices.
Nax. Yep.
Oh yeah, it all adds up very quickly.
Okay. Thank you.
Yes.
Question.
Yes, sir.
You mentioned on the home insurance,
Mhm.
especially on the older homes, how often do you get the true value or to get your home evaluated?
So you can actually go and go to the county assessors, and you can look up your valuation at the county assessors. Just go to the Bernalillo County assessor's office webpage, or you could even go down to the assessor's office. They will pull up a data sheet, and they will be able to give you the true value of the house. And then you can use that for those conversations, for those semi-annual or annual reviews, or just the reach out to your agent to say, hey, I was looking at this. What am I covered for? How much insurance am I actually covering on my home? What's the value? Because that is really critical, because oftentimes you see people may not have the right valuation, but all of that is available and it's free. It's all free, because again, you're paying taxes. So the assessor's office has that available to you for free. And there's some reports that you can download for those that are dealing with property sales and homes, and that are agents out there. They know what report I'm talking about. You can actually download some reports that will give you data that goes years back, and it actually shows where your value climbed up and all the previous details that are connected to the property that the county and the city have tied into. So for you as the homeowner, unless you didn't get enough sleep on this presentation and you want something to help knock you out, you might get a copy of that report, but you really just want the valuation piece, and that's usually in the top 3 pages of the document.
Thank you. And now another question on your home insurance. I mean, on the contents and your home, is it insured? The insured is it insured for the replacement cost or the actual cash value of your home?
So that depends on the type of policy that you're actually purchasing. There's the replacement cost. You could buy a policy that's a replacement cost, and there's the cash value policy that you could purchase as well. And again, there's going to be pros and cons to both. And so some people, and I really appreciate you asking that question, because there's a lot of people who don't know what type of insurance they have on their home. That's a question that you need to also be talking to your licensed agent about and saying, hey, am I paying for replacement cost, or am I paying for, cash value? What's my coverage? What is it? Educate me, teach me, because a lot of times people don't really know what they've got. They sat down in the office, there was a lot of words, and then they were like, oh, that's a good price, and they signed off on it. And so, but that's a great question, to ensure that you know exactly what policy that you have for your home coverage.
Thank you. Another question, one more on car
Yes, sir.
insurance. On your auto policy, does it cover a rental car?
Okay, so this is one of those things. Again, some auto insurances have rental car as part of it. So it's bundled in there. And it's just part of it's kind of like going to McDonald's and getting a double cheeseburger meal. The fries come with it. Some insurance companies, you have to buy it separately. And so you really want to sit down with your agent and ask that question and say, what do I have here? My towing, how far am I going to get towed? Some companies will tow you 10 miles. Some companies will tow you 50 miles. Some companies will tow you to the nearest point where you can get your vehicle serviced. So these are important questions to ask, because I think a lot of times people will say, oh, I got towing. Okay, but how far is the towing? And again, is there any out-of-pocket costs associated with it? And then the other big piece that I think that people need to really ask their agent especially is to say, okay, if I have rental coverage, is my rental coverage so that when I am traveling and I get a rental car in another city, am I covered? Or is my rental coverage the fact that if my car gets in an accident, I get to get a rental car till my car gets fixed? Because people get that confused, because all they hear is rental car. They're like, oh, rental car. Oh, I get a rental car. And they don't realize the rental car is, if you're in an accident, the insurance company is going to cover X amount of dollars towards your rental till your auto's fixed. It's not like traveling to another city and you go and you get a car at the airport and you're like, I don't need to buy your $50 a day insurance. I have my coverage through my insurance company. And then you just show them your insurance card. So make sure you get clarity on that as well. But that's a great question. I really appreciate those questions.
Thank you, Feliciano.
Yes, sir.
Awesome. Any other questions? No? Okay. So, Feliciano, thank you so much. We appreciate you being with us today. Wealth of knowledge. It was amazing. I would like to put some of your stuff give to our social media team so they can go ahead and share some of that valuable information that you shared tonight. So I'll be in touch and we'll see with that. But can everyone see my screen?
Yes.
Okay, so our next Gather and Grow is March 18th, 2026. It's going to be from 6:30 to 8 again, and we're going to be having Belinda talk, and she is going to be talking about abundance mindset. So she is actually an abundance coach, and so she is going to talk all about having an abundance mindset and living open-handed. And it is a family-friendly message. We want to invite kids, teenagers, high schoolers. So please bring any kids that you would like on as well. And she's going to be talking about cultivating an abundance mindset that shapes how we show up in our relationships, our homes, our community, and everyday life. So that is what we're going to be doing in March. And we're so excited to have had you, Feliciano. Thank you so much.
Thank you, Feliciano.
Feliciano, this was great. Great information.
Yeah, we appreciate you guys. And again, thank you for all the hard work you guys are doing with the foundation and all the community outreach. And again, if you have questions, don't hesitate to email or text. And if you need information, any of the slides, any items, please don't hesitate to reach out as well.
Okay.
Awesome. Thank you, everybody.
Thank you.
Thanks,
Thank
everyone.
you. Bye.
Have a good night.
Uh,
Have a good night. Be
Vanessa.
safe.
Yes.
Vanessa, when will this recording be online? So many called me and said because of Ash Wednesday, they would be at the services. So they were going to be missing out. So this is great that it's going to be recorded. But
Yes.
When will they be able to get it online?
As soon as we're done, it uploads into my computer and then I will send it off to social media team. And so hopefully they'll be able to send it out.
Oh, okay. Thank you.
Awesome.
Thank you all
Yeah.
for the great
Awesome.
work that you've done. And thank you, Feliciano. This
Bye.
was great.
Thank you,
Thank you,
guys.
Feliciano.
We
Thank-
appreciate it. Enjoy the
Take
weather
care.
we sent.
Take care. Say hi to everybody.
Take care. Be
Okay.
safe.
God bless you.
Okay.
Good night. God
Bless you guys.
Bless
God
everyone.
bless.
Bye-bye.
Good night.
Good night.